Now, we'll learn a little more about investing for retirement tax efficiently from Darren Farwell of the Farwell Group. Good morning, Darren.
Good morning, Marilyn. Look, our From a Woman's Perspective listeners might be a little surprised today to learn that in some cases, you may be able to make an RRSP contribution and get a tax deduction at or even after age 72. I'm going to discuss this strategy in a little detail this morning. You know that I spend a lot of time these Saturday mornings talking about the importance of tax-efficient investing. That old saying, it's not what you make, it's what you keep, contains one of those simple truths, those pearls of wisdom that stand the test of time. And it's never been more important than it is today because tax rates, we all know, are already high, and it seems quite likely that they're going even higher, which means the government's going to do its best to keep more of each dollar you earn from your investments. And now, on top of that, it also appears clear that we're going to be facing rising inflation. So it's a real 1-2 punch. The tax man is looking to take more, and the purchasing power of what you have left is eroding more quickly. And it's this 1-2 punch is why it's more important than ever to consider what you can do to legitimately and effectively reduce the taxes you pay on your investment. And it's why we consider the tax implication of every investment we make for our clients. Not only that, but we actively seek out strategies and ideas to help our clients keep more of what they make. One such strategy is not as commonly used as it could be. You may well be able to make an RRSP contribution at and after you're 72 years old. In fact, when I met Jack at a social event, and somehow we got onto this idea, Jack was quite upset he hadn't heard about it from his financial advisor. Jack is 74 years old and still working. In fact, still quite actively working, earning an income that puts him in the top marginal tax bracket. So making an RRSP contribution could mean a meaningful refund for Jack, reducing his taxes, putting more money in his pocket today. Now, most listeners will know at age 71 you have to convert your RRSP to a RIF or your LIRA, locked-in retirement annuity, to a LIF. Then, at age 72, you must begin at least the minimum required withdrawals each year. And you can no longer contribute to an RRSP in your name. Here's the idea. You can, however, contribute to a spousal RRSP of your spouse if your spouse is 71 years of age or less. That is, before your spouse needs to be in a RIF or a LIF at age 72. So in Jack's case, he can contribute to a spousal RRSP for his wife because she's only 69 years old. Jack makes the contribution, so he gets the tax deduction. The savings go into a spousal account in his wife's name. Of course, any of these tax suggestions need to be reviewed in light of your own personal circumstances, and your accountant should review the strategy before going ahead. Jack was also surprised to hear that at the end of December, in the year he was 71, he could have done his normal RRSP contribution for that year, which he did. He could also have done an over-contribution of his forecast RRSP limit in the year that he was 72. For most people, the math works, and he could have received more tax money back. Unfortunately for Jack, at this point, it was more a coulda, woulda, shoulda. Maybe it doesn't have to be that way for you. Remember, it's not what you make, it's what you keep. So keep more of your earnings yourself with strategies that properly and effectively save taxes. Ask your financial advisor for ideas, ask your bank manager or accountant, or ask me and my team. You're the one who should be coming out ahead.
While I'm taking a breath, thanks for sharing Jack's story. It's an education. If anyone listening is interested in understanding how they can save money and earn money and put it into an RRSP like Jack did, all you have to do is ask the question of the right expert. And if you don't have one, then consider calling Darren Farwell and his team at 416-863-7501. That's 416-863-7501. You don't know what you don't know. And I think that this segment actually, Darren, gave us information that a lot of us were unaware of. So thank you again.
You're welcome, Marilyn. It's always nice to spend time sharing ideas.
These are big ideas and they save money, so very worthwhile. Look forward to speaking to you again soon.
Bye now.